Welcome back, everyone, to the final three matchups, being the semifinals and finals um, of the last four uranium stocks standing in this series. One last time, here's a reminder of how stupidly I've set up the rules and how much I have no idea what I'm talking about. And if anyone's still left to read this, this is just, I guess, my last chance to say goodbye to the last of my friends. So goodbye. It's been nice knowing you. So in the first semifinal matchup, we have Global Atomic versus Encore Energy. Now these are two companies that I think should show good strength compared to their speculative nature, and both have some great upside potential, and both run by veteran management teams. Both of these companies I really like, and this is a tough decision. But when I compare the two, I look at the size of Global's deposit compared to um, the Encore's. They have great land package, Encore, but they don't have anything much proven yet. And while they may have some low cost mineable projects throughout the US, which is probably a much better jurisdiction than Niger. I look at the permitting, and permitting in Niger would probably be much easier than many parts of the US. That plus the pounds that Global has, and the fact that their cash flow from the operations should be significant enough to already get them a better valuation than what they're getting. Global is our first finalist. Now here we are in the second semifinal, which is Cameco against Bannerman. Now these companies are pretty day and night in terms of the risk reward profile. Cameco can go for a long time in terms of cash flow, dividend, and strengthen over time, versus Bannerman, which is more of a speculative proven project with um, just that needs a much higher price, versus Cameco does not. Well, they would want a much higher price and would need it to restart MacArthur, but can survive in this type of price environment for a much while longer. So why is the winner going to be what the winner is? Well, the winner is going to be Bannerman, because while Cameco has a solid base and solid potential, or solid state, Bannerman has the much higher potential. Like if you're looking for the price of uranium to go wild, or even to get well above um, where it needs to go, let's say, because there's going to be some, if there's going to be some shock, or if there's going to be some panic or some security of supply concern, if we get to a point where there's a security of supply concern, Bannerman should do amazing. Because you look at it today, its market cap is what, 30 million, 50 million? And you look at those pounds and the definitively proven and production of 7 million pounds a year. What country that needs to secure its uranium production would say, you know what, that's too expensive. $1 billion, it's too expensive. Look at what China paid for the Husab mine. Now, Husab is bigger, but it's the same concept. And if you're looking for something that the West can buy, or sorry, the East can buy, some country in the East, maybe India, maybe China, maybe Russia. If you're looking for something they could buy for security of supply, then Bannerman is probably the best bet, and there the economics might not be considered. So if you look at it that way, the upside potential is good, is very good in my view. So obviously that can't be 100% of your portfolio, but the upside potential compared to the strength on the downside is a lot stronger in Bannerman. Cameco, less downside potential, but much less upside. And for that reason, Bannerman wins here. So here we are in the final, Bannerman against Global Atomic. And I have to say it's probably not what a number of you were expecting. And, there's been some surprises even to me along the way. And just based on taking a hard look at one versus another and getting to a spot where you narrow it down. So these are both Africa-based large deposit companies. Now, I'm thinking about it, and maybe I'm biased to like that as a strategy. And so I'm recognizing just that I might be biased in getting here. Now, that being said, these are companies that, in my view, could be big buyout potential targets if we get to an environment of security of supply, which, if we look back a few years in lithium and there's this massive concern over security of supply, if we're there in lithium, I think that if it it's mind-boggling that we'd be able to get to such an extreme point in lithium and not maybe consider getting to there in uranium as well. But when we're comparing these companies, we have on one hand Bannerman, which has a DFS and is in the process of slowly refreshing it, and there's no point in rushing that until the price gets to a better spot, so they'll probably only finish that then. And then they will have a significant amount of time to ramp up towards production. Now we compare that with Global Atomic, that is not quite ready yet. We'll have to see what the PFS and then DFS look like in the coming few years. But they have time along the way to explore and advance their projects. And they have the cash flow to advance and to spend a bit of money. Bannerman, on the other hand, does not have the cash flow, but they do have a good amount of cash to let them survive for a few more years of operations. So these are both strong companies, and that is another bias that I have had and I've noticed is I'm developing or have developed over time an affinity towards companies that are strong enough to last through, if it takes longer, type environments. So with that in mind, let's look at the two. Massive deposits, strength to last a few years. So let's say Mr. Borshoff is right. Let's say it takes a few more years. Well, then what does the picture look like? Because after all, that is the point of having some strength to be able to last. Well, then you have two companies that are both ready, both in a permitting friendly region. One of them has a cash flow and will probably need to spend much less in terms of equity to build the project. On the other hand, you have Bannerman, who has great leadership. I mean, they both do, but Mr. Monroe's affiliation with the WNA and his in-depth research on the macro of uranium, I would give that a slight edge versus Global Atomic, whose leadership has experience with the actual mining of uranium. And in a price cycle that we could be heading into, they both have some significant merits in terms of getting the mine operational. And of course, both of these companies with their big deposits, if it takes longer, and if we then get to a point where the price will go higher and get to a more pronounced high, both have significant upside potential. So enough yammering. Who wins? For me, the winner is Global Atomic. And this is because it not only has resilience to the downside, but it also has potentially even more upside potential, because the deposit has the potential to be bigger. And if you were lower the grade threshold, the cutoff grade, then it's a very, very, very big deposit. And so that gives it not only more upside potential than Bannerman, but also some less risk if this takes longer because of its cash flow. That being said, it may have to finance, and Bannerman might not, depending on when this goes, depending on how things roll out. But overall, Global Atomic is going to be the winner for me, and I know jurisdiction, again, Bannerman is probably a slightly better jurisdiction, but the risk pooling in terms of the if you were to say, well, what if there's some big problem mining uranium in Niger and some big geopolitical event? Okay, let's say there is. Well, then we have to look at what knock-on effects that would have at the other uranium operations in Niger. That would probably send the price significantly higher if there's no uranium mining in Niger. So of course, this is just a piece within the portfolio. And all of this is, of course, very subjective. But for me, for today, Global Atomic will be the winner. Thanks for watching, everyone. Remember, never investment advice, never suggesting to use leverage. I'm just trying to compare things. Three of those decisions were incredibly difficult for me, at least. Maybe you have an easy choice making something else. And so we're left with four great companies with great potential, and I will be doing round 4 and 5 in one video, the next video in this series, and that will be coming up soon. Until then, have a great day.